What's up, everyone? This is Kenny here from Promise Stories. So last week, right, I went to the EPF office, and I went to the EPF office to actually withdraw some lump sum money to pay down my housing loan. For those who do not know, EPF stands for Employee Provident Fund. It's a pension fund managed by the government of Malaysia for all employees, and self-employed, you can actually contribute as well. So 70% of our contribution, every monthly they will cut from our salary, and also the employer contribute a certain percentage. 70% will go to account 1, which is not to be touched under any circumstances until you age 55. But account 2 is the one that you can withdraw. You can withdraw for housing, you can withdraw for medical, you can withdraw for education, further education, okay? And a few others. You can check EPF website to know more. Nowadays, even withdrawal for housing loan also can do online. It's very convenient. So back to my story here. Over the years, right, a few people have been asking me whether is it worth it to withdraw the EPF housing loan to pay lump sum or even installment. Personally, I think it's worth it because the first things first, can you guarantee you will live until 55 years old? Right? Especially if the house, if I'm staying, like the house right now, I'm staying, I would want to own the house outright as soon as possible to get the loan out of my mind. So what I'll do is that if I have the capability, because you need to have minimum 500 ringgit in the account, then you can withdraw. So if I have the capability, I will withdraw it every year or any time that I can. And also to pay down my housing loan as fast as possible because I won't stay. At least if anything were to happen to me, if I have to go, I have to die, I die, at least my family is taken care of. From my wife, my kids, especially for those who are married and you have children, you have a wife, housewife, or the other way around. Wife work, but husband is house husband, okay? So this one is very important. And I think that withdrawing the EPF, right, will help you to also finish the loan earlier. Instead of paying in 35 years or 30 years or however many years, you can cut down the tenure, okay? And own the house outright. When you cut down the tenure, right, and you have got no loan, I don't know about you, but I feel it's very liberating not to have not think about how to pay the bills next month, okay? It gives you a little bit more freedom to explore what you want to do. Maybe you want to have a career transition. You switch careers. Nowadays, it's very common. There's the days where we choose one job and then stick to it until the end of our lives or till we retire. It's very rare these days already because the internet, again, has changed the game. People now is from start career A, then will switch to career B, and switch to career C. Maybe it's all different industry throughout their lifetime. So I just would like to share with you that is the value of freedom and the peace of mind that you get if you settle your housing loan using your EPF. But Kenny, if I withdraw, take for investment, better can or not? I think if you want to take for investment, you cannot also withdraw directly to the stock market, right? So how do you do this? People actually withdraw this via their housing loan. Imagine today, you have a housing loan principal of 500,000, then you can withdraw 50,000. So you knock off the principal, 450,000, right? Then you refinance or sell the house, then you unlock the equity of 50,000. I assume the house didn't go up in price and your loan is only 50,000, okay? So you unlock that 50,000 from EPF. Then you want to invest, you can invest. Personally, I wouldn't go and do something risky, take something high risk with it, okay? I would prefer something more conservative, maybe a US ETF. US ETF is also giving, S&P 500 is giving about 10 to 15% per annum. Might as well just go and choose a broker, put that extra money into the broker and invest overseas. Doing this, I will have two advantages. Number one, I will have the growth of my funds. Number two, I'll have the currency advantage. Okay, you have a forex advantage. Even before you do anything, you already make money from forex exchange. That is what I would do. For this question is whether to take out to invest. You could ask yourself whether if you can beat the EPF returns of 5% per annum, 5-6% per annum. It's like nearly consistent, 5 to 6% per annum. If you can beat it and you're confident, And most of us, myself including, we are not good investors. Okay, so I would personally, if I were to withdraw, this is what I'll do. I will go and put in something that is less risk, like an ETF overseas. So I'll in two parts. I think for this is like you need to ask yourself a question: can you earn more elsewhere? And then another thing that people rarely talk about is that if you withdraw from EPF, you sell your house or you refinance the house, you can take out and clear your high interest debts. Suppose you have high interest debts like personal loan or credit cards that is really bogging you down and giving you too much stress. Why not just take out, refinance, or take out and then then sell the house. You sell the house, then you settle all your bad debts and you can start anew. Okay? So that's it, ladies and gentlemen. Personally, I will do the withdrawal for the points I just shared earlier in the video. Whether you do it or not, it's up to you. And so it doesn't mean that I withdraw, you need to withdraw, okay? That's all from me for today. This is Kenny here from Property Stories. If you have not subscribed to the channel, do hit the subscribe button down below and I'll see you again next video.